Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you all having a fantastic weekend. In today's video, we are taking a look at the macro charts, the short-term charts, the total cryptocurrency market and total altcoin market cap. We can see respective breakouts on the downtrending levels for the RSI for both the total cryptocurrency market, the altcoin market, and even on the Bitcoin chart. We are going to be discussing what this means moving into the upcoming weekly candle close in less than 24 hours. We'll also be discussing the S&P 500, the 4-year cycle, and so much more. Before we get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure, raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. That is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin to join, checking out our membership information by the first link, or checking out a 53+ month trading track record by that second link. Go ahead and take a look. We'd love to have you in there. Let's jump into the content. So taking a look at Bitcoin's price action over the past couple days, we have seen a dramatic amount of horizontal, slightly downward consolidation above that major level at 106,000. Now, this is a good sign because we know already 106,000 not only is the midline level between the range low and the range low of this higher time frame consolidation, but we know 106,000 is the critical level of resistance which we will need to close a weekly candle above, which will facilitate a continuation to 110 and maybe even a new all-time high. So while we've sustained above 106,000, the charts are looking good. We only really run the risk of a correction again if we start dropping below 106,000. With that being said, if we take a look at the last 24 hours of price action, we really haven't seen much at all. In fact, if we look at the range of which the price action has moved since the beginning of the weekend, we have seen around 0.4% from wick lows to wick highs, the max range over here of price volatility. So we obviously have seen a massive reduction in volume and a massive reduction in volatility, which will obviously also lead to a massive reduction in liquidation. So taking a look at that market data, volume is down nearly 50% at 91 billion, incredibly low over here. Looking at liquidations, we're down 71% at only 66 million. Again, incredibly low on the liquidation department as a consequence to volume really falling off a cliff. So again, is this because the market is in a delicate position? Is this because of the recent news events all coming to a close, the ceasefire agreement more or less being respected and the market are waiting to see how the new week develops? Or is this simply because the market is ridiculously indecisive moving into the weekly close? We'll be discussing all of this in today's video, of course. Moving over to the DXY is still looking relatively bearish over here. We are expecting macro continuations to 93 to 92. This has been an expectation for quite some time. Again, we would only really expect the DXY to push back up over here if we see one of a few things. Number one, we can see the trade deals fall through. Number two, we see the conflicts continue or escalate in Iran. And number three, we see any sort of indication by the Federal Reserve that they are not going to be dropping interest rates, or they're going to drop much later on, potentially in a more unforeseeable, unpredictable manner. Any variation of those three events could result in the DXY pushing back up, but provided we don't see any of those, we do expect the DXY to continue down on the macro scale. Looking at the S&P 500, the S&P 500 is acting absolutely fantastically, pushing into a brand new all-time high here. If you've been following our channel for at least 2 months, you would know 2 months ago, we put out a expectation for the S&P 500. This is probably from one of our older videos around 2 months ago. You can see we expected a correction down into around 5,100, only then to bounce all the way back into these new highs highs. We have seen that now play out absolutely perfectly as expected over here, which is great to see. And the S&P 500 is looking very, very healthy. Again, positive momentum shifts occurring here on the daily, indicating again the selling pressure that was developing through this uptrend with the downtrending momentum was absorbed, facilitating a continuation through these highs and now into a brand new all-time high. The only thing here is now we are in all-time high territory. We are in price discovery, so therefore we do not have any historical data to suggest where the price is going to react negatively from, and therefore we have to take each level at a level by level basis. So that means whole numbers, psychological levels, 6,300, 400, 500 are all levels where people may potentially look to exit, take profits, or even could be areas of newly developed resistance. So we are watching those psychological levels, watching how the market does respond and react. At the moment, provided this level is able to sustain as a support, it is going to be bullish and price expectations are higher. On the macro scale, provided 5,700 holds, we do expect higher. So worst case scenario, we drop back in, confirm deviation, move back to the 250. Best case scenario, we hold above and we'll see direct continuations. That is it, guys, sort of broader market updates. Let's jump into Bitcoin. Before we do, go ahead and sign up to BitGet, BitUnix, or BingX of the exchange links down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support me making this content for you on a daily basis. And of course, you'll support yourself trading on exchanges I use and I trust. Go ahead and check it out. We'll play an ad and we'll jump right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's go ahead and jump back into it. I want to start on the 4-year cycle and also just the macro chart in general. So this is of course a 4-year cycle here, and the monthly chart over here is also overlaid with the market cipher A indicator, which is a representation of basically volatility in comparison to the distance between the 50 EMA and of course the price candles. We'll also be taking a look at the Ichimoku cloud, and of course taking a look at the Gaussian channel, but we're doing so on the weekly and the 2-week for those charts. The purpose of this analysis right now is to show you, based on the 4-year cycle, where the expected top is, and then to dive down to the smaller timeframes, the 2-week and the weekly, to build an understanding of how the current trend is actually developing, where trigger points are laying, and where these major warning cliffs are sitting. So let's jump into it. The 4-year cycle, as we already know, and as we have already heard a billion trillion times, is essentially a date range trend which measures the 3 segments of a cycle. It measures the bear market, the consolidation / accumulation, and then the bull run. And it does so by measuring the month-to-month date range. So how many months we see between key points of the cycle. So that'd be tops to bottoms, bottoms to bull runs, and bull runs to all-time highs. As we can see historically, we have had a slightly diminishing cycle each time. We've seen 49 total months in the first cycle, 47 total months in the second, which is a decrease of 2. And if we were to apply the same decrease of 2 to the current, which would confirm the diminishing cycle theory, we would see 45 months. So essentially that is 49 from absolute bull run top to absolute bull run top. If we're breaking that down even further, we have got our bear markets. The bear market has been 14 bars, 12 bars, and 12 bars. If we take a look at consolidation/accumulation, we saw 16 bars, 16 bars, and 14 bars. And if we take a look at the bull run, we saw 19 bars, which is 19 months, 19 bars, and we are going to hypothesize 19 bars as 14 plus 12 plus 19 would equal 45. That means an expected all-time high, according to the 4-year cycle, would be during the first week of August 2025, which means we have got July, August, essentially 4 to 5 more weeks of this bull run, according to the 4-year cycle, until we enter the next phase, which is the bear market. Now, this is not my theory. This is not my prediction. This is what the 4-year cycle suggests. Whether or not the 4-year cycle will be correct is up to massive amounts of debate and speculation. We could go on a massive tangent into why it will be wrong. We can also talk about why it could be correct. The point of the matter isn't to define whether it's right or wrong. The point of the matter is to identify a key date or a key range on the chart and then look for confluence around that point to increase the potential that we are entering a bear market there, or that we have only got 4 to 5 weeks left of a bull run. So assuming the 4-year cycle does play out, it does tell us we are nearing the end of this cycle. So let's break this down from a technical perspective. If we are breaking it down from an economic perspective, it wouldn't make too much sense to assume there's only 4 to 5 weeks left, right? We've got interest rates potentially coming down. We know that is inherently bullish for the risk asset market, okay? We are seeing conflicts de-escalate. We are seeing the trade deals come to a close. We are seeing even speculation of insurance companies and banks more and more accepting cryptocurrencies as payments. This is all stuff that is inherently bullish, whether it be policy, economic policy, or it be policy that is industry specific, all drives up demand for the asset. As we know already, policy increases or decreases demand depending on what the policy is. So there's a whole range of ways we can look at this, which can go to either validate the 4-year cycle targets or to break them down and dismantle them altogether. Nevertheless, it is suggesting August, the first month of August, the first week of August, will be the top for Bitcoin before we then enter a 12-month downtrend followed by a potential 12-month consolidation. So let's talk about this now from a weekly and 2-week perspective. When we are looking at the 2-week chart, we take a look at our Gaussian channel. Historically, the Gaussian channel has indicated not the end of the bull run, but has done a fantastic job at predicting when massive corrections, okay, generally start, capitulation. So it won't predict the start of the bear market, but it has predicted at what point do we see mass capitulation, likely into brand new lows. If we take a look at every single prior cycle, whether it be this cycle here, which is the first cycle, when we broke into the Gaussian channel upper band on the 2-week chart, that is when we saw the massive correction follow into new lows. In fact, we saw a correction from that point of 56%. The large portion of the bear market occurred when the 2-week was broken. If we take a look at the second cycle, when we broke into the Gaussian channel upper band, we then saw a correction of 53%. If we take a look at the prior cycle, correction into the Gaussian channel upper band, we saw a correction of 60%. So when we're looking at the capitulation where fear runs rampant, when everyone starts screaming it's over, that generally happens when the 2-week Gaussian channel breaks down, okay? And when do we see the 2-week Gaussian channel break down? Take a look at the 50 EMA. The 50 EMA is the red line. Look at the 50 EMA. We can see only after we break below the 50 EMA do we drop below the Gaussian channel upper band. Now, if we look at the price action, we are well and truly sitting above the 50 EMA, and we're well and truly sitting above the Gaussian channel. So even if we were to see this mass capitulation, it is not going to be expected for many, many, many months past the expected 4-year cycle top, okay? Let's take a look now at the weekly chart. Nevertheless, these are important things to understand as we go into the next year of price action. Moving over to the weekly chart, we can take a look at something like the Ichimoku cloud. The Ichimoku cloud, particularly The cloud itself, the leading span A, looking at prior cycles, historically, when we drop below the Ichimoku cloud, the leading span A, okay, the green line of the upper cloud, we generally enter a steeper downtrend. So again, the capitulation doesn't happen for quite some time, but we move into a steeper downtrend when we lose the the leading span A of the Ichimoku cloud. We can see instance 1 over here. We can look at the next cycle. Instance 2 happened right over here. This was after we created the top. And instance 3 right over here, we have not occurred yet. But we can see already that the upper band of that cloud is sitting more or less on the upper band of the Gaussian channel. So we don't have a lot of time here until we reach the top per se of the 4-year cycle. But we can see that these trigger points, which could result in corrections and bear markets, are starting to creep up, which would signify we are likely to see some sort of bear market or correction on the macro resume or start after August 2025, whether it be during August 2025 as per the 4-year cycle or months after the fact. So, what does this really mean for us when we're looking at time horizons? We can trust the 4-year cycle and say, well, we've got 5 weeks left, and then we can take a look at the price action and try to see how that would play out, or we can use it as simply a point of confluence, and that is what I'd suggest. Using it as simply a point of confluence, not gospel. It is good information to know, but it is very likely that the 4-year cycle at some point will dismantle, will fall apart, and will not sustain into the foreseeable future. It will not last forever. So let's jump into the next charts over here. Total cryptocurrency market cap, total altcoin market cap. Now, whichever way you want to spin it, and you want to use a 4-year cycle or not, it does suggest we have 5 more weeks of bullish price action, so we need to use that as a foundation, a basis of our analysis. Looking at these charts here, the total cryptocurrency market cap breaking out of the downtrend, altcoin market cap breaking out of the downtrend, representing positive momentum shifts. Not only positive momentum shifts, but we can see the altcoin market cap has broken back above the baseline of the Ichimoku cloud, meaning it is ready to see a move upward provided the market allows it. Remember, the altcoin market does not drive the cryptocurrency market. Bitcoin does. But it is very reactive and responsive to the market. It is prepared for a move upwards here if the market will facilitate it. We can see the breakout of the baseline, the breakout of the RSI. It is ready to see a move up provided it is facilitated. Looking at the total cryptocurrency market cap, we've seen a breakout on the daily RSI indicating a positive momentum shift. Provided we sustain above the 50 EMA, we are expecting continuations up into 3.4 trillion over here. Moving over to Bitcoin. Bitcoin has got its weekly candle close in 24 hours. Most importantly, we can see again on the daily chart, we have had a breakout here on the RSI. Now, what have we seen through the history of Bitcoin's price action over the past year? We have seen a very similar pattern on the weekly chart. We have seen consolidation right over here into absorption, into momentum shifts, and then expansion. Momentum shift and expansion. Look at this. Over here, we've had expansions into consolidation and exhaustion, into absorption, into momentum shifts and expansion. We have seen that again, time and time again on the weekly chart. Again, another instance over here into expansions past momentum shifts. We are now seeing that play out on a smaller scale here on the daily chart. Let's go back to the daily chart. We can see we have had this downtrend, we have had absorption, we have had a breakout on the RSI, which if stands true could result in an expansion toward the upside. And as we know, the first week of August is the expected top for the 4-year cycle, which could result in one final leg up before we then see a real top for Bitcoin before we continue down. That is a very real scenario for Bitcoin and very, very plausible. But for us to see that last leg up before we reach the 4-year cycle top, now again, whether or not that will be the top is entirely more speculative. We're going to assume it's just hypothetically for this statement as a top. We reached the top, okay, in August. We do have one final leg up for Bitcoin according to these charts. Now, whether or not we see that leg play out is going to be determined by this chart and this chart. Let's take a look. The 4-hourly chart, the key level we need to sustain to facilitate moves to 110 is going to be the 50 EMA, and most importantly 106 to 106.4. This horizontal level, this gray box. If we sustain above this level, the next target for Bitcoin is 110. This is the likely target for Bitcoin, provided this support sustains. Only if we drop below the support do we then run the risk of corrections. This is essentially the line in the sand. This is the trampoline. This is the safety net for the market. If we hold above here, we expect continuation. So yes, this is the expected direction for Bitcoin, upward, provided this holds. If we lose this, we then expect corrections back downward. Here's the amazing thing. We've had the daily RSI breakout. If we take a look at the downtrend for Bitcoin, by retesting or by breaking through or into this 110 level, we subsequently break this weekly downtrend we have established, which will facilitate an expansionary leg into new all-time highs. So yes, new all-time highs for Bitcoin are possible. Yes, they could occur within the next 5 weeks. Yes, the weekly candle close is priming for a bullish weekly candle close of both a bullish engulfing candle and closing above the 106k level. Yes, there are elements that could completely change this. Maybe we'll see war break out again. Maybe we'll see news come out that's really bearish that pushes the price down. But those are speculations. We have to go off the data. The technicals are suggesting positive momentum shifts. The price is priming itself for a continuation upwards. Bitcoin is holding above critical supports which act as validations and invalidations, where only if broken do we expect the price to go lower, and currently with 24 hours remaining, the price is holding in a relatively safe spot. When we apply context to this, the overall expectation based on the 4-year cycle is that we do have a few more weeks left of uptrend, which could facilitate another move upwards. And when we look at the economic and global geopolitical climate, that does appear to be moving towards a trade deal approval, which is inherently going to be perceived to be bullish, and de-escalations in global conflicts, which may only last another 5 weeks, right? Even if we only see this news remain bullish for 5 more weeks, and then we see trade deals go to hell, and we'll see global escalations come back on positive, and everything goes bad again, well then we go back down. But we've created that top, we've facilitated that 4-year cycle top. Something to think about, guys. Have a fantastic rest of your day. I'll catch you all in tomorrow's video to discuss how all of this played out. Are we going to see it happen? Are we going to see it close? Are we going to see the price sustain? Are we going to see this 5-week period of bullish price action or not? Thank you for tuning in. Catch you tomorrow. See you then. Bye.